Hey everyone. Canoo is a relatively different kind of EV car company. And in this video, I'm going to share with you how Canoo is different from other EV companies from the perspective of Canoo's management, right? They discussed a lot about how they are different from other EV companies, and I thought it shed a lot of insight into that prospect. So let's get into these details right here. So the company said that weakening consumer demand and higher negative margins on early production units for many of the newcomers that chose to put in place large production facilities ahead of confirmed orders has been a challenge. And I find that to be true. I follow a lot of these newer EV companies, including Rivian, Lucid, Polestar, Neo, Xpeng, and some more. And one of the challenges that they've had is they spent billions of dollars up front building these massive production facilities with the plan that they're going to produce and sell much more cars than they're actually selling. And that's been a challenge, right? They thought they were going to sell a certain amount of cars and they've continuously lowered those targets, lowered the forecasts. They thought they were going to have a gross profit margin positive at a certain point, and that's gone longer, and they've delayed that. So that's been a big challenge, and Canoo management is right to point that out. So Canoo is saying our strategy is different and therefore has different challenges that we are focused on remediating as we raised very targeted milestone driven capital. And that's true, while other EV companies spent billions of dollars upfront building manufacturing capacity and ramping up production, Canoo has yet to really build out manufacturing capacity and ramp up production. They've spent their capital mostly on research and development and other areas other than manufacturing, which they're now just starting to ramp up. The management team says we have a multi year organically growing order book with 200 plus mile EPA confirmed range with our highly efficient configuration for last mile delivery use cases, which is often 30 to 50% higher than competition. So Canoo is focused on commercial buyers of its EVs for last mile delivery. In fact, it has a large order with Walmart, right? And Walmart does a lot of deliveries worldwide. So that's a huge strategic partner for Canoo. Its cars have 30 to 50% higher efficiency than their competition. That's what's going to drive adoption from other companies, right? If you can deliver better efficiency, meaning better price to value relationship, it's going to drive companies like Walmart to come to you and say, hey, give us more of your cars because you're going to allow us to make deliveries at lower cost. And that's really what's going to drive adoption of its cars to begin with. So the other OEMs have always focused on establishing large capacity up front, but this has often been an anchor during tough economic conditions and radical changes in technologies, which again is very true. If you spend billions of dollars up front with the expectation you're going to have this much sales at a certain price point, and then once your facility is up and fully functional and now it's time to make those sales and you realize, oh my goodness, interest rates have gone up by 5%, consumers are less interested in buying electric vehicles now, what are we going to do? And you've seen many of these companies lower prices, fire people, and really lower their estimates for what they think their sales are going to be. Canoo instead focused on launching a commercial product without the high cost and manufacturing risk and complexity based on consumer expectations of interior trends and infotainment systems. So this is a big advantage for Canoo, right? They're only producing cars that they've got orders for, and their production is less complex and less expensive because they're making products for commercial owners, which are not as picky. They're not thinking about, oh, the color is not the color that we like, or the infotainment system is not as the screen is not as big as we like it to be, right? They're focused on a simple function, which is, can you get our cost of delivery down? Because we're spending billions and billions of dollars to deliver products from our online websites. Can you get that cost of delivery down by offering us electric vehicles delivery instead of regular combustion engine deliveries? So I thought this insight from management gave some good clarity on how Canoo is different from the other newer electric vehicle companies. I hope that gave a good difference between the upfront focused investment versus Canoo, which is waiting and more cautious, and in my opinion less risky, because they're waiting to get the orders and then they're ramping up production, and they're focused on commercial buyers and not consumers, which I think is also less risky. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.